Okay, good morning, everyone, and thanks for joining the class. So today we want to look at some basic things, right? And it's just brushing up our understanding. Or if you are new, that is, you want to get some understanding about how some things work and how some things is. So firstly, we want to look into synthetic indices. Synthetic indices. So what do we mean by synthetic indices? Synthetic indices are simulated markets that mimic real world price behavior. Are you with me now? What do I mean by mimic? That is the way the real price action works. The way the real price action works. So the synthetic market is only doing a copycat of the real time market. So when you are trading the synthetic market, it's not like is a real market. So it's program. It's actually a program market. So it's not like a real market where they are active. Human beings involved. You know, in the real market, human beings are involved. They are buying. They are selling different kind of thing. Different kind of assets. Are you with me now? So, but in synthetic, it is program, just a mimic of the real time, real world price behavior, but are not affected by real world events. What do I mean by they are not affected by real world events? Like I said the last time, I was talking about interest rates, unemployment rates, all those fundamental things that affect how the market moves. Those things do not apply to synthetic. Are you with me now? It does not apply to synthetic at all. It does not apply to synthetic. That is, it is created by the broker, so it's just a mimic of the real time price action. I hope you get that. Okay, created and offered exclusively by brokers like Deriv. There are other brokers that offer synthetic this thing, but majorly the ones that people trade is what is the one people trade is Deriv. Are you with me now? What people trade is what is Deriv. Most people, especially me, I don't know about others, but the one I will even advise you is Deriv. If there are other synthetic out there, you can try them out, but the one I recommend for you is Deriv broker. Okay, key future, just like the crypto market, 247, 247. Just like the crypto market is 247, that is 24 hours a day, 7 days a week. No external market influences. Like I said, news does not affect synthetic. There is no economic data that is affecting synthetic. It is just on pure price action. You're only going there to show your skill, to analyze. No government is responsible for anything. The only thing that can happen or can do something to the price action is the broker, because they are the one that created it. So if they like, they can do some trick or some things to it. Are you with me now? So if it's this thing I analyzed like this went my way, it went this upside way or the likes. So it is program, right? So if anything happens to it, it's caused by the brokers, not like it's influenced by news or economic data. Nothing. If you look at price action of synthetics, it's always straightforward. Not like everywhere we just scatter. Are you with me now? So now that is what synthetic actually means. I hope you get that. It's just like a mimic of real time price behavior. And we have different types of synthetic indices. Different types of synthetic indices. We have the volatility indices, and in short, you can call them VIX. We have the volatility indices. In short, you can call it VIS, or you can call them VIX. So we have VIX 10, 10 1S, 25, 25 1S, like 50, 75, 75 1S, 100, like that. Once you open the river and you log in, you connect your. I have created a video before, a video about linking your deriv, where I did where I did an example of how to link your deriv to your MT5. So I will look for the video and I will drop it. Like once I drop this particular record and tonight's record, I'll now drop that one along with it. Are you with me now? So that you'll be able to know how to link your deriv to your MT5. So it's just the same process with any other broker. So just copy your login from your broker, either is Xness or whatever broker, and then you go to your MT5 and then you search for the um broker's name. They will give you some information that you need to look for. I did all the example there. So now another synthetic indices that we have, most of the ones that we have is volatility VIX. We have crash and boom indices. It's one of the craziest one. Not even one of the, it's the craziest one among all the synthetic indices. You can't argue it. When it comes to crazy pairs, it's this crash and boom or boom and crash. We have crash 500, 300, 1000. There are other crash that has been added. We have the boom that a lot of them has been added to. So I just put the 500 and 1000. We have more than them. So when we are talking about crash, because if you don't understand this thing now, as a newbie or someone that is not even a newbie but have not traded the synthetic market before, and you don't even understand how these things work, when we are talking about crash, it means sudden price drop. Sudden price drops. That is, hey, if I could remember in I think around 2021, I was doing this thing. It was the way I was doing it was gambling. Are you with me? I was doing it like gambling stuff. So I wasn't doing this properly. This is how this crash work. When we are talking about crash, if you go and open the crash, maybe crash 500 or any of the types, and you open it, you will see that market will just be going up. Let's say, for example, now you go to crash 500, you open buy, crash 500. Are you with me now? You open buy position. You will not see any red. At first, once you open it, the first thing that will pop is red actually, because they will first remove their spread. I will get to that one. They will first remove their spread. So, but all you will be seeing is blue. You will just be in profit. Market will just be going your direction. You take a buy, market will just be going. Let's say you funded $10, and most of the pairs that are very volatile, like maybe like crash 300, you now open a lot size, and then price was going your direction. You are seeing profit of $2 within 1 minute. You are seeing $2, $3. If crash comes, if the spike come, the spike from your $3, it can turn to -$8 straight within a second. I don't know if you understand this thing. That is why it's called spike, boom, and crash. So if you are someone like you, the first time I opened it, I was like, this thing, what kind of pair is this? This one is just giving me profit too. I'm not seeing any loss. I was seeing like plus $5 back then, plus $6, plus $7. By the time the spike happens like this, I saw like -$16 straight away. My eyes just clear. And the funny thing is that if the spike happen, market will start creating little candles again. It will start going your direction, You can have another spike. Another spike can lead to like -$20 again. So like that. And you can also, I personally, I recommend trading the direction of the spike. For example, now, if the market is bearish for crash, I would gladly go and trade it. I like going with the crash. The crash is actually sweet. Are you with me now? Because in crash markets now, if you want to buy, it will take time. It will be going little by itself. But if the crash happens, like 3 or 4 spike, you are already out of the market. 3 or 4 spike is enough to give you profit, or unless you want to swing. If your flesh full, are you with me now? Same thing with the boom. If you press sell button, market will just be giving you profit like that. You'll be seeing profit, profit, until there is a spike that goes up like a boom. That's why it's called boom. That boom, you can see like minus. Depends on your lot size. So this market, you have to be very careful. I don't want you to go there and blow your money before you understand these things. You know, I've said this now. You I recommend you going with the crash. Let's say you want to trade the crash. I recommend you selling. Or if you want to go along with the boom, I recommend you buying. Are you with me now? So those are the advice I will give to you based on experience. So I've told you now that one of the pairs that are crazy in the synthetic market is boom and crash. In the VIS, we have the VIS. Is it 50 or 51s? Those ones are volatile. Volatile means that there are pairs in the VIS too that um, don't go and open any this thing. Someone should go to Telegram and tell this Sabii boy that I'm not seeing his application at all. All application I've approved everything. I'm not seeing his application at all. Maybe he should re-register again. I don't know. I think some people are having problem trying to register. I don't know. All these things are simple now. Boom and crash. That is how it works. Like VIS, I think VIS 50 or VIS 51s is very volatile. So you will need good capital. Because even with the lowest lot size, you can start seeing like -$5 or with little movements. So you have to understand this thing. That's why before I start trading synthetic markets, even you must you must you must open, what is it called? You must open a demo to see how this various pairs react, like you, so that you can understand their volatility. Like you must have the experience of how these things work. Like you have to practice with demo, not live. Even pros, they try to practice with demo to see how fast this thing is, how this thing, the lowest loss size. Because even all these pairs has different volatility. They have different lot size. Okay, when I'm talking about volatility means the speed. Let me just use that English. The speed of how things move. I think that would be good for you to understand. If market is a low volatile, it means the way it moves is very slow. And a high volatile market means that the movement is always crazy. Sorry for using the word. Very fast. Are you with me now? So let's proceed. We have range break indices, track price movement within set ranges. All these things, they are programmed. We have step indices. We have step indices. Step indices, I see step. All these things I've even forget the type self. Step this thing. I have one of this step. I have one of my favorites is there. And so I choose the one that I like. They are the ones that I don't like their price action. I will just leave it. Okay, it's not a must that you trade them, because most of them, their price actions are different. Their price action are different. You must know what you want to go and trade. You must know what you want to go and trade. Not that because you want to flip now, you want to use VIX. It's not all the PS that you just go and put all your skin inside. It's not until you bleed before you understand some things. I'm shouting my own now. So let's proceed, guys. So now, why trade synthetic? What do I mean by why trade synthetic? It means what are the benefits or pros or cons? Why trade it? Why should you trade it? It's available 247. That is 24 hours a day, 7 days a week. That is always active. Anytime you open your chart, you always get there to analyze or take trade. Consistent price behavior. Ideal for technical analysis. That is the price action of synthetic. If you open your chart and you go to synthetic, the price action is clear. Like you will see the downtrend is, it's not that crazy. Like just try to um compare, let's say Euro USD, and try to compare it to any synthetic peer price action. You will see that it's different. With synthetic, you can't see weak start dropping anyhow. You can't see weak start dropping anyhow. Today's class can be quite long. I'm thinking of what we are going to 3 topics. See person writing on my distance. It's ideal for technical analysis. So in third one is fully automated. That is, it's automatic and free from geopolitical or market news impacts. I believe we are good with all this understanding about synthetic indices. Once you have this understanding, it's not just about you want to flip, you want to flip, you want to flip. It's not just about this things. You want to flip, or you don't even understand what you want to go and flip on. You don't understand all these things because even synthetic markets, the price action is very consistent than the forex market. It's very consistent. That is, the price action is very clear. For you to mark your direction is quite not that hard, not that hard compared to the forex market or the crypto market. Okay, so let's proceed. So, introduction to trading apps for crypto. See, when it comes to these trading apps, one thing you have to know is that you must be ready to learn. Each crypto or forex, each crypto or forex application that you download, all of them usually have tutorial. Like for example, now you just download Bybit today and you register. A video will actually pop up. Let's say you go to sports, it will pop up that this is how sports work. Oh, short videos. It will actually show you because they will explain it better than the way I will even explain it. Are you with me now? So even in the Bybit apps now, there are a lot of features there, and I can't explain everything. Even I don't understand everything about the Bybit because there's a lot of features. There is a lot of features. So now, if you let's say you open your Bybit now, you go to your spot or you go switch to features. This thing. I made a video about Bybit too, how to place trade, how to do it. I will send everything. I did a this thing on it, a video on how to place trade, how to do this thing. I made a video about it. I will send that one too. And I made a video on synthetic, how to connect your broker deriv to MT5. I will send that one too. In case I forget, anyone can remind me after tonight's class, right? So now let's proceed. Choosing the right trading app for profitable trading. What are trading apps? Trading apps are software platform that allows users to buy, sell, and analyze financial instrument like cryptocurrency. When you are talking about buy, sell, we are talking about the likes of Bybit, BingX. That's where you can buy and sell. But if you want to analyze the financial instruments or the forex pair, you go to TradingView. By now, I believe everyone listening to me should have TradingView on their phone. On their phone. All your question, you should just because on Saturday, I'm not teaching anything. Are you with me now? You just have to keep asking questions. So today, I'm not answering any question. It's just for you to so that the video will be everywhere will be clear without disruption of what is this one, what is this one. Okay, that's why we created a day for question only. I hope you guys understand that. So let's proceed. So we have trading view, and that trading view is what you can use to analyze your forex pair and to analyze your crypto pair. But you can't go to trading views to analyze synthetic indices because someone will start asking that question now. Big Gentle, or what's the name? Well done with what you are writing. Trading view. If you go to your app store or what is it called? What's this Android this thing? Or Google Play. Yes, it's Google Play, right? And search for Trading View. And search for Trading View. I think I write the apps here. This is how Trading View looks like. Maybe you are using pad or anything. This is how it will look like. I think this is how it looks like on iPad. So um laptops too. Search for Trading View. Trading View. Okay. So now, if you want to type your trading app for crypto, I believe you have your notes so that you'll be taking note of what to go and download. For crypto, you are going to download either Binance or Bybit or KuCoin or Coinbase or BingX. That is broker of your choice. When I was explaining in last class, I was talking about participants and I mentioned crypto I mentioned exchanges. So when it comes to crypto, you have to select your own exchanges. What I use Bybit. Bybit is what I use. But there are a lot of them. You can use Binance too. You can use Bindex. But what I use is Bybit. Are we clear on that? So now we have features. And also among this crypto app, we have Trust Wallet. We have other decentralized crypto app. So now, quick one. Let me quickly explain between centralized and decentralized. Centralized means that it's being regulated. There are rules enforced in it. Are you with me now? Like Bybit, Bingex, they can send you email. They can send you email. This is your password. If you forgot your password, it's centralized. There are rules that bind it and the likes. Are you with me now? So um it's a centralized platform. But when it comes to Trust Wallet, it is decentralized. See, with Trust Wallet, you just want to go and keep your funds. Let's say you have high funds that you want to go and keep. That is what you are going to Trust Wallet and save it there. So Trust Wallet, once you register, search for Trust Wallet. It's not two, it's just one app. You can't find two there. Trust Wallet. That Trust Wallet is where you can keep your crypto pairs. You are not clicking buy and sell there. You are not buying and selling on Trust Wallet. You want to go and keep your crypto assets there. Are you with me now? So now, if you register, they will give you a unique what is it called? There's what we call it. They will give you your logins, and the logins can be in forms of different ways. They can give you let's say for example now your logins, they can give you like phrase. Thank you for reminding me, Jerry. They can give you phrase, and this seed phrase includes, it can be cat, jog, mug. You see all this that nonsense, they can be like 10. So you have to go and keep it. You have to go and keep that seed phrase. So don't let anyone access that seed phrase, because if you forget that seed phrase, like you lost it, if you just lose that seed phrase, if you lose it like this, just forget it. Even the owner of Trust Wallets can never help you. Are you with me now? Even the owner of Trust Wallet will never find it for you. I don't think there's any customer support for Trust Wallet or anything. It is Bybit that you can go and be doing that one. With Trust Wallet, once you lose your seed phrase, just forget about it. Your coins are gone. Even if it's $1 million, you have added it to the market to sustain the market. It's part of the liquidity. Maybe it's a giveaway. So that's why you have to keep your seed phrase safe. I hope you understand the difference between the Bybit and the Trust Wallet. Now you can see that one is centralized, regulated, and one is not regulated and decentralized. So now features, we have the trade spot, we have the futures, we have staking. When we are talking about sports means that you buy and then you wait. So buy now and expecting certain interest. Let's say you buy BTC at 100,000. By the time BTC increase to 110,000, let me check this record. Okay. By the time BTC increased to 100 and 100 and which is best for you to use Bybit if you want to start trading sports futures. But if you want to keep your assets, you can also I keep my asset on Bybit, not even Trust Wallet. Because one of my guy, I think yesterday, he said he sent $500 to Trust Wallet. When he woke up, it turns to $27. I was like, why? I don't even understand. But there's no reason we can do. BitGet, I don't use it. I don't use BitGet. There's no reason for me to be having like five exchanges. What do I want to use it to do? Bybit and Binance. What I even use is Bybit and BingX. That's all. So we have futures. We have, please guys, I want to change my network this thing. A minute. Okay, I'm back. You can hear me, right? Please let me know if you can hear me. I changed my network. Okay, let's proceed. So, like I said, those are the apps. And when we are talking about sport, I said, let's say you buy Bitcoin at 100,000. By the time Bitcoin gets to 110,000, and what the amount you invested is $100, what you'll be getting is 10%, right? Because it is a 10% increase. So your profit will just be $10. And your total balance will be what? $110. So that is just speculating markets with sports. But futures, you is a contract. Futures is a contract. Once you have a contract, you have an agreement with them that once price gets to um amount, your broker should do what? Close this trade or open this trade. So it's a contract, unlike sports, such that even if your $100 turns to $10, you can still leave it, hold it. If the price of that particular asset increase it, like it appreciates or it come back to its normal value, your money will still come back to that $100, and if it goes above it, you will see your profit again. That's a spot for you. But futures is another thing on its own. And staking is just you investing in a pool, and that one is another things on a different level. So other features, we have NFT, we have Web3 integration, and so on and so forth. We have forex trading apps. I've mentioned the crypto home. Forex trading apps, we have MT5, we have MT4, but what I use or recommend is MT5. We have C Trader, and like I said, trading view, this is it. You can use it to go and analyze. You can use it to go and analyze. So synthetic indices trading apps, the Reef, I prefer using, what is it called, their website and the application. The application can confuse you. Trust me, the application can confuse you. So the website is even more user friendly than the application itself. So I've mentioned it before: 247 of synthetic indices, crash and boom range break, and then how to practice before trading live steps to get started with demo accounts. Download, and these are steps. Download and install MT5, Binance or Devil apps. Open a demo account to trade with virtual funds. Virtual means money that is not real. Are you with me now? Money that is not real. So you just want to go and practice with it. Practice with different strategies: scalping, swing trading. What you are taught, you are going to the charts and practice it. Then as a newbie, I expect you to practice with demo. As a newbie, not it that you are just going to your charts because you are so high with money, money, money. You just go there and start putting your money online. So that is for trading view. And once you have to know is that once you have to notice that you can't use synthetic in trading view. Like on your trading view, you can't search for VIS25. You can't find it there. So what happens is that synthetic, what is it called, derivatives trading view, like I think they join hands together to open a website called deriv implementation. So there's no application for deriv for you to analyze. So you have to go to Chrome or your Safari or whatever website, whatever application, and search for deriv implementation. Just go to your Google, deriv implementation, and the first one you see, you will see, what are you going to see? You will see the link to the Reef website. So it's actually TradingView that partner with the Reef. You see the tools of TradingView there with on that website. So you can't find an application for it. They haven't provided that one yet. And that is all that. For those, I want to quickly share my screen so you can see the MT5 app. You can see how the Bybit apps look like. And I will share the next slide. So now you can see this, you can see trading view here, see the icon. So if you go to your app store, you can just search for trading view. You can see this is trading view if you want to download it. And this subscriptions, that is if you want to upgrade it. So there are other features in this upgrading, like back testing, having more bars and the likes. That is what all this trading view that's what happens to them. This is trading view. This is the application. This is like a watch list. This is the chart. But with phone, it's quite different. Not the same thing, but just a little this thing. This is how I practice with. Do you know how I practice with trading view? No one hold my hand like this, that this is how you use all these tools or this thing. I started looking at these tools. What is the, because you are not using all the tools here. You are not using all the tools here. See, you just, this is like, this is trend line. You know, this is what this one wants to do. So mark a line. See, that is called trend line. You will find trend line here too. You can see rectangle tool. I have made it my favorite. Let me delete it. If you just click on your tool like this, click on it, hold it down, you can add it to your favorite. Just click on it and it's add to your favorite. There are a lot of tools there that you can use. This is Bybit. That's Bybit. I think yeah, that's all. That's all. So for so let me share the next slide. Let's move to the next topic. Like I said, it's going to be quite long. Okay, so let's proceed. Now, we want to look into a few concepts, three concepts actually: spread, tips, and leverage in trading, and that will be all. Okay, spread, tips, and leverage in trading. What is spread in trading? What is spread? It's actually the difference between your bid and ask price. Difference between your bid and ask price. Difference between your bid and ask price. What is actually spread itself? Spread is like the charges or the fees your broker laid on you. Are you with me now? If your broker, they are charging you something, so that is why if you execute a trade, or as a newbie you want to open a particular trade, If you open that trade, the first thing you will see, like the last section I was saying, once you open a trade, the first thing you start seeing is loss. Like you open a position, the first thing you start seeing is loss. For the newbies, it might look like you are trying to grab this thing, you are trying to grab it. See, you will grab it. You can't you can't grab everything at once. It's step by step. My voice is not breaking. I don't think so. Because I'm actually listening with my phone and my voice is not even breaking on my phone. So I think it's your network. It's the difference between the bid and ask price, and that is what your broker will do. That's what they laid on you as their charges. It represents the cost of opening a trade. It represents the cost of opening a trade, and it is measured in pips. It is measured in pips. Even some pro traders not even understand the difference between bid and ask. I'm very sure I can say that with my full chest. They don't understand the difference between bid and ask, but they can just execute and the likes. When we are talking about bid, it means let me calm down. I'm trying to break it down so that you understand what is happening, how this bid and ask come into places. Are you with me now? If you want to trade a particular pair, a currency pair, are you with me now? You will have, for example, USD NGN, that's USD and the Nigerian currency. Are you with me now? So if you want to trade that particular pair, someone is trying to buy and someone is trying to sell in that particular market. Someone is trying to collect naira and another one is trying to sell dollar. So the difference between these people discussion is what we are going to call spread. Now let me say it like this. When we are talking about ask, it means the amount I'm willing to buy. The amount I'm willing to buy this particular currency. When I'm talking about bid, it means the amount I'm willing to sell. Let's say trader A say I'm willing to buy this particular currency at 100,000. That is ask price. And the second one said I'm willing to sell it at 110,000. That is bid price. Can you see the difference between their 100,000 and 110,000? The difference between these people bid and ask price is 10,000, and that 10,000 is the spread. Are you with me now? That 10,000 is the spread. That is why if you go to your trading view, quickly, let me just go to trading view so that you will see what I'm talking about. Please, if you look at your top left, yes, top left corner, right? Top left corner, you can see where the right sell, where the right buy. I hope everyone can see that. You can see 0.6616, 0.6616. You can see the sell price and the buy price. Why is there different this thing? So the sell is telling you the amount the seller is willing to buy this particular currency and the amount the buyers is willing to buy it. You can see there is difference between them. You can see when we have 0.6616 raised to power 3, 0.6616 raised to power 6. So the difference between these two sell and buy is 3. Just do the math. And the 3 is inside in between this is in the middle of this sell and buy. We have is 0.3. That is the spread. I hope you are clear with that. Just try, if you find it, you just watch the video again and it's all good. It's not that hard. I think I break it down to such that you'll be able to comprehend it. Let me share my this thing again. So let's continue. So for example, that is I said, look at this explanation here. It might take time the way I'm explaining this thing. I think we have used like 40 minutes to instead I they talk. So let's look at these things. Example like Euro USD. So I just want to try my best to explain this thing so that there will there won't be so much question, so much question. Trust me, if you listen to my the way I explain these things, the way I explain things, you won't have much problem trying to ask so many things. In as much you listen. If you don't listen, that's where you start asking some things that I don't know. Euro USD bid 1.1, ask 1.1002. The difference between this bid and ask is 2 pips. So these 2 pips is the spread, and that spread is the fees of your broker. I hope you are good with that. That's all. Now we are good with spread. Let's move to pips. Pips in trading, percentage change, percentage in points, percentage in points. Sorry, this economics things has been entering my head. I said percentage change. Percentage in points is the smallest price movement in forex. For most currency pairs, 1 pip will be 0.0001. I will go into the charts and I will explain how pips is even in the chart is on the chart. That's where I will end the pips calculation. Okay. So after pips, I think the last thing is leverage. So let's go into our chart and so that I can explain what pips actually mean. Now, at your top right corner here, not even top, at your right corner, you can see the price of this AUD USD. You can see 0.66165, 0.66 something. There's a lot of them. You will see that it is 0.6, like 5 digits at the end of it. So now, let's say, where's my this thing? Zero point six. So the decimal place is 5, right? Are you guys with me now? So look at it. But if you want to calculate start listening now, starting from 1 pip. Pips means little movement. Why do I explain this thing? That is, if you want to move now, as like a human being, if you want to move, the little movement you can move, even if you just put your leg together and you want to move, the little movement you can move, regardless of how tiny your leg is. Let's say it's just 6 inches, which is your leg size. The little movement you can move is just 6 inches. Same thing with this one. The little movement this market can move is called pip. So that 1 pip. Are you with me now? So you start counting this from these 4 digits here. You know, on the chart we have 5. You can see 0.65786 and the likes. We have 5 here. And most of these things, if you're finding it out to calculate, you can go to BB pips. All those things they do the math there. Are you with me now? If you just input it, I'm trying to buy at this. If you go to your Google, you can search for baby pips, and it will take you to how you can calculate this thing easily. You can just put this is my entry, this is my exit. It will tell you your points. Are you with me? To tell you your pips, or you can just Google how to calculate pips. It will actually direct you to website that will give you this thing. But I'm trying to tell you how it's actually calculated now. So the fourth one is called is where the pips starts from. So now, if this 0.600 is 0.60,000 moved to, if it moves to 0.6, no, 6005. Can anyone tell me how many pips is this? It moved from 0.60000 to 0.60050. How many pips is this? I'm saying 50 pips. I'm saying 10 pips. It's actually 5 pips. I said you start counting is after this first zero, we have like five decimal places. We have five. So you start counting your pips from this um fourth one. See, this is how it works. Let me explain it. What you don't know. Why some will be like, why is this fifth zero doing here? What's the fifth digit? This one is called pip. This one is called pipette. I don't know if I will spell it right here, but okay. The, the pipette has no strong distance like that. Like little move of pipettes will not even result to 1 cent self. So that's why it's not even calculated. What gives you good value when you are trying to buy in the market is actually your pip. Are you with me now? Can you see pipette is there? So the fifth one is called pipette. I hope you guys get that. So if this is 0.6000 um change to I want if you guys will understand now. How many pips is this guy here? That's it. It's quite simple. It's 10 pips. Because that's why some people will start saying it's 100 pips. It's not 100 pips, too. It's 10 pips. It's 10 pips. I hope we are clear with this. So if this particular one turn to two, that's 20 pips. Turn to three, that's 30 pips. That's 30 pips. It applies to AUD, USD, Euro USD, or every your USD pair. But gold, there is a way you calculate that gold zone because you have to times it. But on Saturday, we are going to look at gold on when we are taking questions and answer. We are going to look at gold. Not same thing for XAU. So that's that. I hope you guys understand this little illustration. So let's move on. If you even search for Euro USD, anything that's has to do with USD, it's still the same thing. They use 5 digits. Why is this one taking time to load now? I don't know why it's taking time to load. But this particular thing affects every pair, every USD pair. Okay? Every USD pair. So but for the Japanese yen is different. For the gold is actually different. So let's proceed. So lastly, the last thing we are going to talk about is leverage. Leverage allows trader to control a larger position with smaller capital. And it is expressed as a ratio 1:10, 1:100, 1:500. Higher leverage increase both potential profit and risk. So now, quickly, how does leverage works? Leverage means you are trying to upgrade something, like try to leverage on something. Are you with me now? So let's say you have $1,000 balance, and your broker gives you 1:100. You have a buying power of 100,000. Note that your total balance is 100,000. You are having a buying power of $100,000 because you have $1,000. But when it comes to this leverage, it means a borrowed capital. Because let's say, for example, now the ones that I use so that you student can understand very fast is BTC. Let's say for BTC's current price is around 80 something thousand or 90 something thousand. That is the current. Let's say the current price of BTC is 100,000. You don't have $100,000 to go and place a buy in the market, or to go and place a buy or a sell in the market. So if you want to buy BTC now and you go to your, let's say your futures, you want to buy BTC, you can't buy BTC um with just $10. You want to trade futures, you can't place a trade with $10 without a leverage. Go out to your broker, go to and put your leverage. Let's say like Bybit, go to your leverage and put it to 1x. On by likes of crypto exchanges, you can actually change the leverage. You can change it to 20, 21, 22, 23, starting from 1 to 100. Most Some brokers, crypto exchanges, you can max it to like 125x. Depends on the exchanges. But with forex brokers, it's actually fixed. You start seeing 1:100, 1:200, 1:1000. Like it is fixed, so you can't adjust it. So when you're applying for your broker, they will give you the type of leverage you want. But the higher the leverage, the more you are exposed to risk. Are you with me now? But at the same time, if you know how to manage your risk, leverage, you will not be scared of leverage. Because the reason for leverage, see, in a nutshell, the reason for leverage, in a nutshell, is just for you to access capital. That is because you have low funds. Like I said, you are trying to buy BTC with 100,000. No, with $10 and BTC is at 100,000. So you will need the likes of leverage. Leverage will increase your buying power. So now let's say you use 100x. That is 100 $10 times 100. That is how much? That is $1,000. That $1,000 can still buy like 0.001 something Bitcoin. Do you get me now? So let's say you can buy like 0.00, I think 0.01 Bitcoin with $1,000 because leverage has doubled your $10. That is how leverage actually works. But if there is no leverage, you can't buy Bitcoin with $10. See, you just have to watch these videos again and try to study it. And try to study it, and don't limit yourself to just what I'm explaining to you. You can just search this thing, this thing, this thing. And by the time you start, sometimes if you start reading PDF, you are just reading it, it's just you and your mind discussing, you won't understand it. Okay, but if someone is able to explain it to you, you go through this video and you go through an article on leverage. By the time you start reading it and the way I'm explaining it, everything will sink. That's actually how you learn, how you study. I hope you guys are with me. So risk of high leverage magnify both gains and losses. Margin calls occur when losses reduce account balance below required margin. Always use stop loss. And when you are using leverage, always use low leverage, not higher leverage. Because higher leverage, as it increase your potential gains, it actually increase your losses too. It actually increase your losses too. So spread versus leverage. Spread is just cost of trading, like cost of opening a position. Leverage is a borrowed capital to trade larger accounts. Are you with me now? How to choose the right spread and leverage? Beginners, low leverage 1:10 to 1:50. That is it with a tight spread. Okay, and a tight spread. And advanced trader can use higher leverage with proper risk management. So I think that's it. I've explained all this. I think Binance offer leverage up to 125x, But with all these things, you can't understand them without even practicing. Okay, you have to practice. You have to practice. So that about all these things. So lastly, lot size. Lot size. See, lot size, what lot size does is that it affects your pips movement. Are you with me now? Lot size affects your pips movement. I think you have a file about it. You spend so much time. Lot size determines the number of currency. That is currency units in a trade. See, just don't confuse the rest. So much English here. Affect how much each pip movement is worth. See, with this second sentence, just understand it like that. It affects how much each pip movement is worth. So let's say you have 1 pips times the lot size you use. Pips movement, let's say 10 pips times the lot size that you use. It will now turn to dollar that you are expecting, either in loss or in profits. So now, when we are talking about standard lot size, types of lot size in forex. So standard lot size means 1, and the unit is 100. But don't confuse yourself about the unit. When we are talking about standard lot size, if you go to your broker, that's why I said you start with broker and you go through this video. So if you open a 1 lot size, just listen. This time you listen. If you open 1 lot size and market move with 1 pip, are you hearing me now? You open 1 lot size and market move with 1 pip. You have $10, either $10 profit or $10 loss. Are you with me now? Either $10. So if market move your direction, you have plus $10 profit because you opened the standard 1 lot size. And if it goes against your direction, you having minus $10. If you use mini lot size 0.1, you can see that from 1, it's reduced to 0.1. That is 10,000 units. If market move with 1 pip, you'll be having $1 profit. Or if it goes your direction, you'll be having minus $1. If you use macro lot size, that is 0.01, which is even the lowest that most broker offers. That's the lowest that most brokers offer. 1,000 units. That is, if market move with 1 pip, you'll be having how much? 0.10 dollar per pip. That is 10 cents. 10 cents is 1 cent is 0. I mean 1 cent is 0.1. Do you guys understand that now? This nano lot size, brokers really offer it because if your micro lot size 0.01 is giving you is $0.10, well, when do you want to buy the car? Or when do you want to buy this thing? Okay, that's why most brokers really give you nano lot size. So nano lot size is 0.001. That is, each pip movement we give you is 0.01. So the standard lot size now, let's say you open standard lot size and market goes your direction with 10 pips. How much are you going to be getting? I want everyone to comment. You open standard lot size, market go your direction with 10 pips. What will be your profit? We said with 1 pip, we give you $10. What's that? Okay, now, if market goes your direction with the lowest lot size, trust me, the lowest lot size most brokers offer is what? Micro lot size. This nano is very different, but I put it there so that you guys, if you came across it with any broker, you will still understand it. Micro lot size, you open micro lot size, and market goes your direction with um with 200 pips. What will be your profit? So that is it. Not $2, it's $20. So that is that about. You see, all these things, it just because if I send just this PDF now, I start reading it, you might not understand. But we have to practice and debate between ourselves. And these are just the calculation that I did there. 10 pips times $10, $100 profits, 1 pips movement. It's just the calculations here. So that's that. I think we have spent almost, yes, 1 hour now. Aggregate 1 hour. So I will send the PDF too. I will send the PDF. I will send the PDF. So beginners start with micro lot size, smaller accounts, mini or micro lots, larger accounts, you can trade standard. I hope you guys understand. So see you guys tonight with same topic. Same topic. Yeah, let me go and eat. Bye, guys.